Good evening, everyone. Welcome, traders. It is 6:56 p.m. It is still Tuesday, uh, and we have our disclaimer here for you guys to all read. So everything that I'm going to mention to you here today, every time I mention anything, it's purely for educational purposes only. And trading involves risk, and you can lose all of your money, if not more than all of your money, if you're trading with a margin account. That being said, let's get to it today. Let me show you what happened to me today. So let's close this and let's go over here. So let's take a look. My net liquidation dropped significantly. Well, maybe not too significantly, but nonetheless, 1%. And all that I'm doing is I'm hedging. And I really wanted to get back to TQQQ because, as you know, I like to watch the NASDAQ. It's, 100 companies in there. And when I look at the NASDAQ 100, I'm going to look at the NASDAQ futures, and it's been coming down. It's really been coming down. I'm trying to keep this chart nice and clean for you. This is just a daily chart. So each one of these candles, as you know, represents the price action for one day. And here we are today. We're right now, because the futures market's open, it's coming up just, it's showing green, though it's down. It's down about $7. That's really not the end of the world. But we saw this big red candle today. And I looked at my positions on TQQQ. Oh wow, we really went down. We went down by about 4%. Okay, remember this is triple leveraged, so there's a lot more risk involved here. So what did I do? You may recall from a couple weeks back that I handed over shares over at $87. All right, here on August 8th, I had sold an $87 call against my shares. The shares that I purchased for around, I don't remember, maybe $77. I don't remember, and that's really not relevant. What is relevant is that I sold a call at an $87 strike, meaning I was comfortable handing over my shares at $87. So what that meant was, oh, I sold someone that opportunity. They thought that the price was going up higher. Good on them. I sold it for 90 cents. Fine. And I had a 26% chance of handing over my shares by the end of the week. It happened. It happens, right? I'm comfortable with that risk. I'm comfortable with that probability. The probability of handing over my shares for $87, regardless of whatever price I paid for, I was comfortable with a 26% chance of doing so. There was a 74% chance at the time that I took this trade to not hand over my shares. I'm fine with it. So here I am. If I want to get those shares back, I'd like to get those shares back at a price that is equivalent to $87, if not lower. So in that case, I would like to sell puts. I would like to sell an insurance policy to someone that thinks that the markets are going to tank, and I will gladly take their shares for around $87. Not only that, take a look at how much premium I have collected. So this was as if I handed over my shares at $87.90. So really close to $88. Let's look at other puts. Look at how much I also sold and collected more premium. Look, this one here, this is 27 cents that I collected. This one, I let it expire worthlessly. That's 45 cents. What's 27 plus 45? I can't do the math. 72? 72 cents, I think. All righty. What else? Here's another one, 72 cents plus another 12 cents. That's 84 cents. And here's another one. Here's 23 cents that I collected. 46 minus 23 is 23 cents. All righty. So now you're noticing here's another put that I sold. I just made a nickel on, which is fine. I guess that was a good move to get out at, right? Yeah. Sometimes I call it nicely. All right. So what I'm saying is that I handed over my shares at $87, but since then I've collected maybe about $1.50 in premium. So I'm okay owning shares at around $88.50, if not lower. So what you can see here then is I sold an 84 put for about 44 cents. So if I get assigned these shares by the end of the week, which at the time I took this trade, I had a 15% chance of this happening, of this occurring. I was okay with that. I was okay. I was comfortable with that risk. You do you. What is your risk tolerance level at? So for me, I sold the 88 put. I also sold an 85 put. I sold even more 88 puts today at a 38% chance of owning these shares. Why? Well, I wanted to sell more puts because, again, I'm happy owning the shares we set at $87 or less. But with all the premium that I've collected since handing over my shares, I don't mind getting shares at $89 or less. And that's why I sold 88 puts. So I'm looking to get some more shares because now I only have about 600 shares and I'd like to get at least 1,000. So what did I do? Well, I think I had 1,500 at the time. I'd have to go back and look at some of our old videos. And what I did here was I sold 9 contracts. All right. Three at 85 and 3 at 88, meaning I would like to own shares if the price comes down that hard. I don't mind owning shares at $88. I don't mind owning shares at $85. It doesn't matter to me. What am I going to do with those shares? As soon as I get assigned, what's going to happen? I'm going to sell calls on them the following week. All right. So hopefully that helps for a little bit. I know the markets went down a little bit. We've got some major news coming out. All right. The Jackson Hole Summit. I get that. I think there's earnings for a few companies this week as well. We had some, I think, building permits or housing starts. Those kinds of numbers are coming in this week as well. So there are things to look at. But again, you will always find news. And if you're always worried about the news, no, maybe you shouldn't be in this, right? I mean, if I'm worried about getting into a car accident, maybe I shouldn't drive. So, when you're trading, there's always going to be something that's going to scare you from dipping your toe or, dipping your hand, and getting into the markets. I understand that. And in order to, well, at least for me, I found my comfort zone when it comes to risk. As you know, when I'm looking at the software that we have over at TheFlowPartners, I generally like to look at 25 deltas. Okay. If I want to get into a particular stock, I like a 25% chance of owning the shares. And so here that's going to be my max, right? And I want to make about 1% per 7 days. And the spreads are going to be a little wonky because the markets are closed. It's 7:04 right now. And if I hit scan options, what are we going to come up with? All right, it's going to tell me that the majority of them sell for this week. And here we go. We have an 86.50. And I always tell you to double check. These are estimated. All right, so please double check with your broker. And if I look at the 86.50, in fact, is giving you a 28 delta, not quite 25. And even the 86 strike is giving you a 25 delta. So maybe what I want to do is maybe I want to look at this one right here, the 85.50. And an 85.50 has been on my mind for a while. All right, that's not so bad. Again, it's not going to give you 1% for the rest of the week. It's only going to give you 1% for a 7-day holding period. Right now, we have 3 days left until the day of expiration. So just keep that in mind when you're using this tool. For those of you who have subscribed to TheFlowPartners.com, that's a little different. You can check that out, and you can sign up for our newsletter there. But this is something that members get that they can toy around with, tinker around with, And when I look at this, it's telling me now that, all right, my total yield is going to be a little less than 1%, as we showed. What do we have here? 66 cents over 85.50. And what is this telling me here? It is telling me that the expected premium is 66 cents, 66 cents over 85.50 is going to give you about that right there. And if we don't, sometimes I want to double check and make sure that the math is okay. So let's go over here and let's say 66 cents over 85.50. Just want to make sure it looks all right. Yeah, 0.0077. And that's what we have here. That's your total yield. All righty. So keep that in mind. If I'm looking at total yield and I'm looking for 1%, I'm not going to be able to get that really at the delta I want. Remember, these are estimated deltas. I want to make sure that I double check these deltas with what I have from my broker. And to do that, if I'm looking at 25 deltas as my max, I might go with the 85.50 for tomorrow just to own some more shares. I'd like to eventually own, I always keep a little, you know, I always keep a little cash over here just in order to, get into some positions, if or close some puts if I need to at a loss or what have you. So just keep in mind, Dr. Y always keeps some gunpowder dry. All right, so DRY. So I have a little bit left over, roughly around 10%, a little over 10% of my net liquidation value. I like to keep that gunpowder dry so I can deploy it when I notice some kind of opportunities. All right. Happy trading to everyone. All right. Best wishes to all. Hang in there. Today was a bad day, and that's okay. Tomorrow we'll see what happens. And yeah, if you have any questions, just, you know, put them in the comment section below. And if you like this video, just hit the like and subscribe button, and hopefully we'll be able to help you out. Thank you so much, everyone. Have a great evening. Bye-bye now.